Are you looking for a couple great stocks to add to your portfolio right now? If so, stick around. What's going on, you guys, and welcome back to the channel. If you're new here, my name is Brandon. As always, we do have our Investing Academy as that first link down below if you're looking for some courses and training here in Canada. But for today's episode of 2 Stocks to Buy, I was crazy excited to film this one. When I was doing my research, I actually made a post on Instagram. I just, for some reason, was really excited about these 2 stocks. I know we've been getting comments that my stock picks are too boring, my stock picks are too safe, and I don't usually let the comments get to me. But for some reason today, I'm like, I have to spice it up. And I've found 2 stocks that are very, very different in the way they are trading right now. Will actually show two very opposing views and ways of approaching stocks to hopefully give you guys 2 very good angles on what I believe to be are some great companies for the long term. If you do stick around to the end of the video, I will actually share with you which of these 2 stocks I personally added to my portfolio, because I did do some buying over the past couple of days, and it's not to say that it's going to be the perfect stock for you, but I'll share with you my thought process behind that. But let's dive on into things, guys. I will ask, if you enjoy this video, if you find it helpful, if you learned something new, feel free to give it a thumbs up, or just take a moment and give it a thumbs up now. That really does help out. But let's dive on into our first pick, and it's a company we haven't touched on in a while. It's the company Tencent Holdings, ticker TCEHY. And funny enough, looking back at my channel, if you go back to 2018, when I first started this YouTube channel, this was one of the first stocks I ever covered. It was one of my top picks back then. Fast forward to today, I'm still loving this company. This is, of course, the Chinese technology conglomerate. If you're not familiar with Tencent, if it's your first time hearing about them, I'd really suggest taking a moment to look into this company. They're really a company that tends to fly under the radar because they are overseas, because they are a Chinese company. You don't get a crazy amount of coverage on them here. But when you look at how advanced they are, the reach that they have, the services they provide, this is a very powerful company that I think we all should be familiar with, at least on a base level. Because to sum up Tencent, in my opinion, I like to call them what's called a social networking company, kind of similar to a Facebook, or kind of similar to a Google or an Instagram in a sense, because they actually have one of the largest messaging platforms in the world in the company WeChat. You can think of this very similar to Facebook's WhatsApp messaging system that we have here in North America. But WeChat, if you look, is actually one of the most widely used apps. It's been growing in terms of monthly active users quarter after quarter after quarter for the past decade, to where today they actually have over 1.2 billion monthly active users, which is a number that has just slowly and gradually increased. They, of course, have a platform, QQ, which is more or less an instant messaging platform, a variety of others that are have some Chinese names that I don't pronounce as well, so we'll leave it as that. But aside from the social aspect of things, the connecting people side, they're also, of course, a major player in video games. And by video games, we've covered them before with League of Legends, Riot Games. They have stake in Epic Games, and really the list could go on if you take a look at where Tencent has their fingers kind of intertwined in the gaming space. But this is one of the leaders in the world in video games, mobile games, you name it. And actually what I like about Tencent, if you take a look into their revenue mix, you really do see a diverse stream. So there's no one single area that dominates, that doesn't leave them susceptible to any major risk of one area, driving all sales. We've got, for the most part, a very even balance between their social networks, again, their online gaming, so purchases of games, in-game purchases and whatnot, advertising on their video streams on their platforms, and then fintech and business services. So they have payment processing features where they charge ongoing fees through WeChat Pay. There's really a very, very powerful platform there. If you're not familiar with Tencent, again, we've looked at this chart before, but we will do an update just to recap where this company is and how far ahead it is of the market. Taking a look at many of the major sectors, whether that be online gaming, whether that be media through the form of video, news outlets, music streaming, literature, payments, this is the number one provider. They are really leading the way. You see the cloud segment on the bottom right is second, next to Alibaba has a big cloud system. Utility-wise, you got the App Store by Tencent, security, and then of course, as we touched on, the communication and social aspect with WeChat dominating the smartphone community. And again, monthly active users at $1.2 billion. And what excites me a lot about Tencent and all of those areas that we just covered is that these are areas that, for the most part, have actually benefited from the COVID lockdowns. I don't want to say all benefited, but they at least haven't been hammered like many other businesses out there. You think to things like video games and people at home playing more video games now that they have time off or that they're working from home. Streaming videos and music and literature, these are all potential places where this company can be monetizing and advertising. And we've actually seen nice growth in those areas, which is a small sample size, but to me, it really portrays what we can expect going forward with this company. They're really positioned in a great spot to take advantage of technology, take advantage of the shift this world's going through with that massive user base. One of the things that I do like about Tencent personally, I actually just saw this morning as I was preparing my notes for this video. They just announced that they got the deal, they clinched the deal to be showing the EPL over in China, the English Premier League. This is of course the soccer league. They're also a longtime partner with the NBA. And they have gone through a few hiccups recently for any of our basketball fans or it wasn't just basketball. I mean, the whole world knew about it with certain tweets being sent out and a very hostile time between the NBA and Tencent and China for that matter. But despite the turmoil, the NBA has committed to this partnership with Tencent, just understanding how powerful this market is. And Tencent is really the liaison. They're that company that when you want to get your product, in this case, the NBA over to China, they go through Tencent and Tencent then distributes it to the Chinese population. Again, they've got this massive user base to leverage. The news that you may have heard of recently, which I don't think is as big of a deal as some are making, but we've obviously been hearing about the WeChat and the TikTok ban with President Trump over in the United States. And in all honesty, I was actually hoping that this ban went through. I was hoping that people would panic, people would overreact with Tencent and the stock would sell off so that I could buy some more shares because, again, Tencent is of course the owner of WeChat. If you were following along with that situation, however, judge temporarily blocks the US WeChat ban. So as of today, the ban has not gone through. Even if it did, I did a little bit more digging and there's about 3.3 million active users in the US, which is still a very large number, but in relation to the rest of the company, in relation to all of the other areas they operate in, all of the other segments, this would be, in my opinion, actually quite meaningless. Despite it being the US market, I would have taken this much more as a buying opportunity. And just to showcase, again, how large this company is, for those that are just getting familiar with Tencent, these are some of the numbers. They are stated in the Chinese currency, so RMB or Chinese yuan. But in 2019, looking at the annual number, they pulled in total revenue of $377 billion. So these numbers are in billions, which does equate to about $55.3 billion USD if you were to make that conversion. So a very strong revenue number. Income, just FYI, 94 billion RMB, equal to about 14 billion US dollars, and that was in 2019. If we take a look at this chart that I came across, which shows the year-over-year growth of Tencent Holdings, of their revenue, of their top line, this to me is an outstanding trajectory that we are seeing with this company over the past decade. And to me, it just goes to show how powerful this company is. And it does, in my opinion, kind of fly under the radar because it does, of course, come with risks, being that it's a Chinese company, being that it's overseas. There's the politics that come into play, especially with someone like Trump in power. And of course, we have elections coming up not too long from now. That is one of the risks you face with a company like this. But the reward is also quite handsome in the sense that they're growing their revenues quite well. And the stock, in my opinion, has performed well to mirror that. At the end of the day, in summary, for the company Tencent, because they've got such a massive user base, I think that size, that scale is something they can leverage over and over and over again. You think to here in North America, the companies like Amazon and Facebooks and the Googles, why they're as powerful, Apple, you could throw in there too, why they're as powerful as they are today is because they've got that user base. They've got those customers, users to just re-monetize over and over again. And in Tencent's case, you have online advertising that can grow, you have more video games they could pump out, more features, payment processing. As I said, there's just a ton of areas that the company can grow going forward. And I see this company being a great growth stock over the next number of years. So by taking a look at the share price, it's not one that is down significantly. And this is actually kind of that first angle I was touching on, because this is more or less a stock that I think has done well and will continue to do well. If you look at Morningstar, they actually have a price target today at $77, whether we want to put too much emphasis on that. But overall, this is my favorite company when it comes to the Chinese market. I think it's one that we should at a minimum have on our watch list, one to kind of monitor going forward. And if you are looking for some tech exposure and you have the risk tolerance for it, I think this is a phenomenal choice. The stock today trades for $65 USD. One very important thing to note is that this stock trades over the counter. So not on a big exchange like the New York Stock Exchange, not like the NASDAQ. You have to make sure that your broker allows this if you are going to pursue looking into this stock more. They do pay a small dividend of 0.15%. Moving along into the second stock for today's video, which is our Canadian selection. I know most of our viewers here on the channel are Canadian, and actually I did notice looking into the analytics, a lot of you guys watching these videos are subscribed, which is really amazing. It's good to see people coming back over and over again, and I'm really happy we have this following. If you're not already subscribed, you're in that portion that's not, subscribe, man, and hit the bell for notifications because we post videos like this all the time. But the stock that we are covering here is one that we have touched on before as well. It's the company New Flyer Industries, ticker NFI.TO. And this is a company that is almost, again, a polar opposite to the one we just covered, because Tencent is a company that is growing rapidly. They're seeing a lot of great success and the share price is reflecting that. New Flyer is a stock that has been going through a very, very rough patch. And this is a stock that I'll preface is for the right type of person. So if you're the type of person that just buys every stock that I talk about on this channel, this may very much come back to bite you in the butt. So don't do that in the first place. But I'll touch more on that later. If you've never heard of New Flyer before, this is one of the North America's leading bus manufacturers. So buses, motor coaches, big heavy duty transit buses, like the type you would take to work or the type you'd see around your local city. They basically operate with two main segments. They have the actual manufacturing and then delivery of these buses, and then they have what they call their aftermarket parts or their aftermarket operations, like many of these big machinery companies where they need parts, they need maintenance and supplies. They get a lot of recurring revenue from this aspect of the business, but those are really their main two drivers, and they have some pretty significant market share across North America and in Europe actually as well. But in this segment, I wanted to go into a little bit more detail and actually share with you guys more or less my thought process as I'm researching this. What am I looking for? All the pros and cons, factoring everything in, and then coming to an ultimate decision. So for example, the things that I would look at with a company like New Flyer is just to take a look at their financials here. I've got the revenue highlighted, I've got their earnings per share, as well as their net income or their earnings. And what we see with a company like this is we see slow and steady growth over the past decade, starting from in 2010, $984 million. You'll note these are in USD million dollars. We see that growing 1.1 billion, 1.4 billion, 1.5 billion to today, or to the trailing 12 months. Revenues are up at about 2.8 or $2.7 billion, which I think is a nice steady growth pattern. If you take a look at the earnings, we see another very solid story. They're slowly and steadily growing their earnings per share. Starting back at 50 cents per share, they've creeped that up to close to $1, $2, $3. But in the past couple of years, we've really seen this slump off. So with the exception of 2019 and 2020, or the trailing 12 months, I've actually been quite impressed with the performance of New Flyer. And if you actually know from the share price, you see that very closely tied. As the earnings start to drop off, so does the company as well, to where the stock has been a very poor performer over the past couple of years. Now, what's going on with the business itself? Especially during COVID, we can highlight here, the past couple months were terrible for the company. These are the actual deliveries of their buses. In Q2, year over year, they saw a 50% decrease in the amount of heavy-duty transit buses they pushed out. Motor coaches, 78% decline from the previous year. A smaller decline here with the medium-duty, low-floor cutaways, only down 23%. But a big factor in these very, very poor performance, again, related to the poor stock performance, is that during COVID, they actually shut their doors down for 2 months. So they completely halted operations just to follow in line with the guidelines, just to be extra safe. What I do find to be, I don't want to say that's an excuse for the company because they have been struggling, but what I do find to be promising, if we do want to look at it on an optimistic side, the backlogs for this company remain very, very high. And this is, of course, just the orders that they have, or potential orders that they have going over the next number of months/years. They have a total backlog of over 10,000 units. And we see, for the most part, it's these HD transit, so the heavy duty transit units, as a lot of cities and a lot of municipalities, they still need to order their buses, and they're actually going to be upgrading to some more emission friendly, some more fuel efficient fleet of vehicles, which is really dominating the backlog here. In terms of the financial health, again, one thing that I did want to look at here was, is this company going to make it through this patch? And that's, I think, really one of the overriding questions we have to ask ourselves. I've highlighted a couple boxes, but if we look at that first red one, this is what we would consider our current assets. So these are essentially cash or money that the company has available to them within the short term, let's call it 1 year. And if we actually divide that by the current liabilities, so that's that third box down there that you're looking at, we actually get what's called a current ratio of about 1.93. And that basically tells us, over the short term, over a 1 year period, do they have enough assets to cover their liabilities, to cover their butts? In this case, I think a 1.93% is actually not too shabby. If we do take a look down towards the bottom of this, you will see a little bit more of the long-term debt that the company has carried. But what I think will really help this company out, first of all, I think what's most important is making sure this company doesn't go bankrupt. What I do think will help this company out, for one, is they are getting, for example, some government support. And being in the space that they're in, public transit is so key. You'll see in the US, in Canada, as well as in the UK, they do have the government support coming in with some money. Here in Canada, for example, one of the big things they're rolling out is 5,000 electric transit and school buses that they want to have over the next 5 years. We also see a plan including $1.8 million for matching funds and the transit operation investments. Overall, this will definitely help out the company. Another thing that I think is very positive for a company like New Flyer is that even despite the terrible quarter that we went through, they still had new orders of 491. So they actually added to their backlog. There are still out there. There is still a demand for companies out there that need either new equipment, they're looking to upgrade their fleets, something of that sorts. But one other thing that I do think they have up their sleeve, or a card that they could pull if worst comes to worst, they're still paying out a dividend. And they did cut their dividend a little while back, but in the last quarter, for example, they paid out $13.3 million in dividends. And that was something that I just thought, for this company, you're going through such a rough time, there should be no issue with cutting that dividend. In fact, I'd actually almost encourage them to save everywhere they can, retain these earnings, really focus on getting the company back on track. Because to summarize my overall thoughts that I had, and they were very jumbled with this one, because I do actually own shares of New Flyer, this is very much a turnaround play that this company has to go through, because there's no question that the past year, this year and even the past year, have been a struggle for the company. That said, I do think that the economics of the area that they're in, I think that the field that they play in, and they are really an industry leader. If you look at the number of the percentages in terms of who uses their products, I know for a fact here in Richmond, where I'm from, every time I see a bus, I look at the back because I like seeing the little New Flyer sign there, knowing that they're the ones providing these buses. This is an industry that I think is going to be around for a long, long time. And there's going to be money invested. There's going to be improvements that are made, especially seeing how a lot of the current vehicles need upgrades in terms of their consumption, in terms of switching over to zero emissions or electric vehicles. What the company will be relying on, and this is what makes it a very speculative and a very high risk play. This is a very, FYI, if I didn't mention this for me is a very high risk play. You can take a look at the market cap of this company to begin with. This is a very small company relative to what we normally deal with. And especially with all the uncertainty about how our world is going to shape out going forward, this is a speculative play. This is a high risk play, which could pan out. But a lot of what will be dependent on this is how fast these other companies can start picking up their orders again. One of the very promising signs that I came across was, this was just released yesterday, Central Ohio purchases 2 of New Flyer's zero emissions, or their new fleet of buses. That is a very, very promising sign. Again, in the quarter, we did see 491 or 471 new orders, new deliveries being taken place. So what I think this comes down to, and I really like to draw on a Warren Buffett philosophy, a Warren Buffett approach on this. I've seen a company that over the past decade has done very well in establishing its role in the space. It's performed very well up to the past couple of years, and it's in an industry that I think is poised to do well going forward. And the market has really beat up this stock, again, rightfully so. But if they're able to turn things around, if things pick back up, if they're able to get some orders in, get some more cash flow through the door, and again, an important metric to look at was their current ratio, seeing now, they don't have a immediate threat of going bankrupt. If we can give this company some time, we could be looking at some very, very attractive prices on this company. One of the things that I like to look at from time to time as just a little bit of a bonus or a kicker is whether institutions and ownership have been buying into this stock. We have seen some buying. This is as of August 31. I'm not sure what these funds are or what these institutions are, to be completely honest, but it's always nice to see some insider buying. Even if you take a look at some of the executives, you take a look at some of the insider trading volume over the past 3 to 6 months, we have seen more buying than selling. Over the past 0 to 3 months, less of that. But overall, this is a company that, assuming you have the risk tolerance, assuming you've made this assessment of yourself, which to draw on personal experience, I've weighed all these options and I've understood the risks, what comes with it, what's the potential here. I think that this is one that if you got the guts to make a purchase here, you could be rewarded quite handsomely. But again, you do have to factor in the downsides because this is a smaller cap stock. It is quite unique. And I'll tell you, this was actually the stock that I purchased and added to my portfolio, as I already owned some New Flyer and I was down about 25%. It is not an easy thing to do, to purchase a stock when you're down like this and when it's looking very, very gloomy. It is seriously, from in the pit of your stomach, is not an easy thing to do. But we can hope that a couple years from now, a few years from now, maybe 10 years from now, we look back and this was more or less just a speed bump in the company's long journey. They really have been around for a long time if you look back to the company's history. And if they're able to nail this switch to electric vehicles, which is really what you're gambling on, it could be a really good one that does pay off. The stock today does pay a dividend. We're actually looking at a 5.21% dividend as the shares are trading for 16.33%, but I would not say you should be investing in this stock for dividends at this point. Because of the uncertainty, this dividend is very susceptible to being cut, in my opinion, but it's also a bonus if you are looking more or less long-term as this as a recovery play. So guys, those are my 2 stock picks for today. We got a Chinese company and a Canadian company. What do you think of the selection? I really was excited to film this video because we get 2 very, very different companies in a sense that Tencent is just a high flyer doing really well. And this is just a stock that's just been hammered. But I think they can still turn out to both be great investments, assuming they're right from you. So always do your own research, always do your own due diligence. If you did enjoy this video and you appreciate it, drop a thumbs up because that really does help me out. If you're not already subscribed to the channel, you can subscribe for more content. We post videos every week. And like I said, we do have our investing academy down below. If you're a beginner to the stock market, if you want courses and training, click that link below and join our community. We're working with hundreds of Canadians. We have a super cool group that you get to join. That's our Investing Academy. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.